Earning money through peer-to-peer lending and crowdfunding. Both peer-to-peer, P2P, lending and crowdfunding have become increasingly popular ways to make your money work for you, rather than having it just sit in a savings account accumulating dust, or rather, very little in interest. Here's what you need to know. Understanding peer-to-peer lending. P2P platforms allow you to lend money directly to individuals or small businesses online. Think of it as being a bank, but on a micro scale and without the brick-and-mortar vault. Pros 1. Higher returns compared to traditional savings and some other investment vehicles. 2. Diversification of your investment portfolio, spreading out risk. 3. You help real people or small businesses that might not get funding from traditional banks. Cons. 1. Risk of default. Borrowers can fail to repay loans, which isn't too different from the game of musical chairs, but with credit scores. 2. Illiquidity. Your money can be tied up for the duration of the loan's term. Crowdfunding platform investment. Crowdfunding is the cool kid on the investment block. You're pooling your money with a bunch of other investors to pump money into a project or business venture that you believe has the potential to take off, like a rocket made of dollar bills. Pros. 1. You can get involved with exciting startups or real estate investments with relatively small amounts of cash. 2. If the project is successful, your returns could be significant. Cons. 1. High risk. Startups are notorious for crashing and burning. Anyone still got their DeLorean? 2. Returns are not guaranteed and they can be quite a ways off. Getting started. Get your Sherlock Holmes on research is key. Scrutinize every detail about the platform, their history, their credit check methods, how they handle late payments, and their recovery process in case of defaults. Some platforms also spread your investment across multiple loans to mitigate risk. The good old don't put all your eggs in one basket strategy. Portland practices. Living in Portland, Oregon gives you an interesting advantage. You see, the city is brimming with progressive initiatives and small businesses that are always looking for funding. Local crowdfunding projects here can have a tangible community impact, which might be a factor worth considering. After all, community is what Portland is known for, aside from rain and really good coffee. The nitty-gritty numbers. Just to be transparent, I'm not a financial advisor. I don't wear fancy suits, and my knowledge of golf is limited to putt-putt. So it's important you do your own due diligence or perhaps seek out a local financial advisor, here in Portland or wherever you're from. But here's the skinny. You can expect to earn anywhere from 5% to 10% or more on P2P platforms, which is certainly more than your average savings account or CD. Crowdfunding returns are harder to pin down because they're so contingent on each individual project's success. Community and contribution. Personally, there's something fulfilling about being part of someone's success story. Whether it's a debt consolidation loan that someone pays off because of your investment, or a startup that turns into tomorrow's big thing, you get to be part of that narrative. Just remember, with any investment, there are risks. Never invest more than you can afford to lose. Use your head, but yeah, listening to your gut isn't the worst idea either. Happy investing, and may your money multiply responsibly.